So it has been 2 years since my last investment strategy update. And the last one I did was in 2024, 2 years back. And I still remember back then I was still dollar cost averaging into two ETFs, which is the VWRA and the QQQM. And somewhere along the lines, I actually switched over to S&P 500 using the ticker SPYL. And that is still my largest ETF positions even till this day, especially since the second half of 2024 until 2025. In fact, in my $1 million portfolio video, I actually shared that SPYL was my largest position, right? Around 19,000 shares, which is around 300K USD. So back then, the setup was very simple. It was focus fired on US because quite bullish on the US market's growth as well as the companies. And just to be clear, this is only for my cash investments. So for my CPF, OA, and SRS investments, they are kept in a separate bucket and a separate broker. Anyway, since this is an investment video, I have to be very clear that this is not financial advice tailored for you. I'm just a random guy on YouTube, just speaking nonsense and financial entertainment and just documenting what I'm doing. Of course, if you think this is helpful, then you can help me click a like. But if you want to join a like-minded community of people interested in investing their wealth to early retirement, then join us at over 22,000 members in the Honey Money SG Telegram group for free. So let's talk about the transition. After reaching the seven-figure portfolio, I think there is a mindset shift, right? Because I was so focused fired on US companies, S&P 500, but I felt that there is a need to transition to a global mindset and not forgetting the fact that for my CPF and FRS positions, a lot of them are invested in the Money Prime USA fund, which also tracks the US markets, large and mid-cap companies. So even though I am not bearish on the US markets itself, I still feel the need to diversify away, especially from a global standpoint, right? I cannot bank on USA being the majority of the portfolio and neglecting the rest of the world. And this is especially true when you're managing a large portfolio compared to a smaller portfolio. So that's why I had this shift of mindset. I have stopped my dollar cost average into SPYL, the S&P 500 ETF listed in London Stock Exchange since 2025, and have moved to an all-country world index. And if you remember in my previous investment strategy video, I talked about BWRV, and in fact, they have lowered their expense ratio to 0.19%. But I still feel that it's still a little bit high in terms of fees. Therefore, I want to provide another alternative. Of course, this is suited to what I researched and found about it, and this is called the SPDR, MSCI All Country World UCITS ETF accumulating. And this is an UCITS ETF that tracks the MSCI All Country World Index. So what does it track? It tracks the equity market performance of developed and emerging markets with an expense ratio of 0.12%. So it's the ultimate buy the world fund, right? You cannot just focus on US, you buy the entire world, which captures over 2,700 companies in 49 countries. So if you look at the fact sheet, there are a few listings across different country exchanges, and I ultimately chose the ticker ACWD because it is denominated in USD, plus it is listed in the London Stock Exchange. And since this is an accumulating fund UCITS ETF, there is not going to be any dividends paid out. Okay, it's just that the dividends, when they are paid out, they will be deducting 15% dividend withholding tax instead of 30%. And these dividends after tax, they will be reinvested back. That's why it's called accumulating fund. And since this ETF is not domiciled in the USA, there will be no estate taxes. And let's take a look at the top holdings. That will be the Max 7 companies like Nvidia, Apple, Microsoft, Amazon, Alphabet. But if you look at the top position, it is less than 5%. So that is quite different from S&P 500 because of a lower US markets exposure. In fact, if we look at the country weights, the US only holds 64%, followed by Japan, UK, Canada, and you even have developing economies like China and India. So that's much more diversified. So my plan for ACWD is to dollar cost average through a regular savings plan twice monthly. And for the brokerage of choice, I'm using Interactive Brokers because it has access to London Stock Exchange. And for the commission-wise, it's going to charge me $1.70 US dollars. So are there any other brokers where you can buy this ETF? Yes, there are. But the thing is that the foreign exchange fees or the foreign currency spread may not be as competitive as Interactive Brokers. And even the commission itself may not even win Interactive Brokers, which is why it has been my broker of choice and what I use to accumulate wealth over the long term. That's why if you want to invest in the UCITS ETF, I highly recommend Interactive Brokers. So you can click the link here or scan this QR code right here to go to Interactive Brokers and check out their platform. Just to be clear, this is not sponsored by them, but it's a form of support if you appreciate the content. So let's move on to my second investment strategy that's going to have an update. And that's going to be called the insurance rationale, namely gold and silver. First of all, I hear you because as of the date of recording, gold briefly kissed $5,000 per ounce and silver crossed $100 per ounce. But I have to be clear that I've been accumulating these precious metals like a few months back. And I understand that many of you, when you invest in stocks, it's for the price growth, it's for the future outlook. But in terms of precious metal like gold and silver, it's not because they are gaining value or not. It's because the fiat currency USD is losing the value. It is devaluing due to all the money printing that the US is doing. And if you look at the central bank signal, central banks are buying more gold at alarming rates to really protect themselves from the weakening US dollar. So I feel that gold is very different from stock investing. It's not because gold is good. Gold is just gold, it will just stay at its 1 ounce of gold forever. But the reason why I enter gold and silver is because I see it as a portfolio insurance. I can accept that it will not grow. But I understand that if I keep my cash as fiat currency, like the USD, it will continue to weaken over time due to all the money printing and devaluation. So gold is often seen as a store of value, especially during volatile periods like Greenland, geopolitics. Now, silver's role is quite different from gold. Silver actually has industrial usage, especially in the upcoming industries like EV, solar, and AI. All these things that require silver to manufacture. So silver is quite different because there's a manufacturing aspect of it. There's a usage of it compared to gold. But when you invest in precious metal, I just want to highlight that you need to be aware of this thing called GSR, gold-silver ratio. Okay, I will not go into the details, but you can go and read up gold-silver ratio before you go and invest in all these precious metals. So other than physical gold, where you can buy at the gold bullion, where else can you purchase gold in the form of paper gold like ETF? So here are a few tickers that you can look at. I'm just telling you that you can search for the best low fee one that suits your appetite. I'm not going to recommend you any because that's going to be financial advice. But some of it are listed in the London Stock Exchange, some of it are listed in the US. So there may be some estate tax exposure there. Then if you want to invest in paper silver, the ETF, here are two ETFs that you can see. They are the most popular. And for my precious metals, similarly, I'm going to DCA twice every month. So depending on this ETF, whether it is listed in the US markets or they are listed in the London Stock Exchange, you have to see your preferred choice of broker lah. So if they are listed in London Stock Exchange, you need to look at the brokers that provide London Stock Exchange, like Interactive Brokers or FSM1 or Saxo, all this depending on what you currently have. Then if you want to buy the US domiciled tickers, right, you can still buy on Interactive Brokers. But if you are really using a low-cost discount broker like Longbridge, like Umu, like USmart, okay, all this, then you can continue using them and buy all these US domiciled tickers. But if you ask this question, I don't have any brokerage account yet, which one should I open? Then objectively, based on the new user welcome rewards, which is not sponsored by anyone, the best one right now is Longbridge because you have this interest boost coupon that can boost your returns. Like even before you start buying any stocks or ETF, you already profit from the interest boost coupon. So it's like paying you to wait to make your decision. Yeah, and then you can take part in their funding and deposit and hold requirements. Then you can get some free stocks. All right, so if you want to support the channel, feel free to use the Longbridge link to sign up for an account. But I have to remind you, every broker has their own pros and cons. So you can use the promotion for your advantage, but in the long term, you have to see which ones really suit your profile, your behavior, and your taste. That's all I can say for brokerage. So to sum up my entire investment strategy for 2026, firstly, I have stopped adding into S&P 500 ETF because I want to diversify away from the US and add into global exposure. And that is through the MSCI All Country World Index. Then the next step is to increase my precious metals allocation. I cannot say the specific allocation number, but I would say that it's a nice number to keep as an insurance allocation. Not too big, not too small, just nice enough. Then if you're lucky, you are earning a higher income, you can save some excess cash to prepare to buy on during market dips or market corrections. And for myself, I always believe in passive investing because be active in your active income, passive in your passive income, right? And passive income will come mainly from passive investing. Active income will come mainly from my businesses, which is my YouTube business plus my solo biz consultancy. This is what I'm going to focus fire on in 2026, which is a kind of reinvestment back to my business, right? I invest in the business more than I invest in the stock market. And the reason why I do passive investing is because I want to be more lifestyle freedom, I don't want to every day look at charts, look at financial news, I have a life to live, especially with my miles, my credit card points, and my cashback. I need to start to enjoy life, right? After achieving a milestone, I think it's important to not just look at financial markets, it's to enjoy life, right? Live a life that you want to own. So if you're curious, if I really have a $1 million 7-figure portfolio, then I can refer you to a previous video that you can check out right here.